Hello, this is Mijun from Mijuron University. September 23rd, today's Miju Shimyeon speech begins. Welcome once again to Mijun, where we continue to uphold the fundamentals of investing in United States stocks. As I explained in detail at the beginning of yesterday's Monday broadcast this week, Monday, Tuesday, and Wednesday, which means until tomorrow, we are currently offering a 50% discount on the annual membership for Mijun. Actually, this discount event wasn't originally planned. I accidentally exposed my email address a few times, which caused trouble for me and also caused inconvenience to the managers at Pending who handled the Mijun membership. So going back, we had no choice but to hold a surprise sale for 3 days. If any of you have been interested in the Mijun membership, I've posted a comment like this in the description of the video. If you click here, you can go to the promotion page. And on this promotion page, you can find detailed information about how the Mijun membership operates and various other details. So this can help you make an informed decision. And if after reading this information, you're still not sure whether the Mijun membership will be helpful for you or not, if you have such thoughts, there are as many as 1,076 reviews left by existing members. An unbelievably large number of people have shared their feedback. So today, since we're having a 50% discount event, there were a few reviews that I personally liked. I'd like to read some of them to you. There are a lot of great reviews that were left in the past, but I think it would be more helpful to read you some of the most recent ones. Among the reviews that were left over the past week, I've picked out 3 good reviews. The first one was written yesterday by someone using the username Samdolmam. Hello, I joined the membership through a great opportunity. The banding chat room felt awkward at first, but after watching some of your new dubbed videos, I realized once again how much effort Mijunim puts in. I will watch and read the valuable materials you uploaded with gratitude. Nice to meet you and thank you. I'm also grateful that Samdolmam Neem joined us and it's good to see you. The next review was left 3 days ago by someone using the identification Gyeong Yun V. It's been almost a month since I joined the membership. At first, I signed up for just 1 month to try it out and decide whether to extend it. After using it, I liked it. So today, I signed up for a 1-year annual membership. I'm really enjoying all the great information you post, and above all, I like that I can check Mijunim's trading status in real time. Since I have a job, sometimes it's hard to read all the posts you upload, even though I know you carefully select and share only the information needed for investing. Without joining the membership, it would take me much more time and effort to find the information I need on my own. That's why I'm so grateful for the Miju membership. I'd like to welcome you, Gyeongyeon V, and thank you for your great review. This time, here's a review written on September 14th by someone using the identification Boreum Keonsa. I happened to discover Miju 5 years ago and started listening. I live in Atlanta, Georgia. It's a channel I love and use so much that I always recommend Mijuin's channel to many people interested in stocks. I just became a member now. I hesitated to join because I couldn't properly listen to the videos you upload every day. But when you said you would take 2 weeks off to move to Malaysia, I thought I would go through withdrawal, so I joined, and it's so great. I should have joined earlier. I left this very positive comment. Let me read just one more. Someone with the username Belly wrote this on August 27 and even shared their investment list with me. Hello, I've been a subscriber since the early days of your YouTube channel for 5 years. I'm a 38-year-old man living in Irvine, United States. My stocks were negative for the first 2 years. I didn't have any standards for making decisions, and the only information I got was from YouTube. Since I didn't have much knowledge, I uploaded videos about stocks with sensational returns. Then I ended up buying more, and it took me over a year to even follow about half of what Minyonim did in her videos. Since I'm stubborn, it wasn't easy to just go along. I had to sell some stocks, but it seemed like they'd rise if I did. After holding them so long, selling felt wasteful, and my investments were emotional. So I thought that if I joined the banding and paid money, I would follow along with more responsibility. In my first year after joining the banding, I mainly just followed the stock picks. I didn't know the importance of ratios. Out of Mijunim's list of 19, I just bought the ones I thought would go up a lot, or the slightly bigger companies, just according to my own judgment. When Mijunim made 100%, I got a 33% return. It was similar in the second year too. Come on, it must have just been luck. I thought, will companies like SMCI keep coming up? But even then, he was 20% ahead of me. In the third year, I thought about it and realized that if I had followed him well from the beginning, my assets should have doubled by now, but I missed that opportunity. So I made an Excel sheet and matched my stocks exactly to Mijunim's ratios. I bought Mijunim's book as soon as it came out, and he explained everything so well based on real data. I followed 90% of Mijunim's portfolio, and for the remaining 10%, I invested in stocks that I think are a bit risky but have potential, like BMNR, Ethereum, and Pagaya. I'm seeing nearly the same return rate. I realized that despite great mentors like Mijunim openly sharing stock picks and returns, it still took me 4 years to become their student. You have had the most positive influence on my investment life, so I sincerely thank you. Please always take care of your health and continue broadcasting for a long time. Personally, I got choked up while reading this comment. So, over these 5 years, you've been with me on YouTube and invested together with me, and I think you've had a variety of different experiences along the way. Sirikon Belinim, thank you so much for your heartfelt and wonderful review. All right, I think that's enough promotion for the Miju membership for today. All right then, let's get started with today's Big 2 news prepared for September 23rd. Today, let's start by going over the current state of the United States stock market. To review yesterday's situation, let's first look at the S&P 500 map. Yesterday, the market was mixed. About half of it is green and the other half is colored red. Personally, I think there seems to be a bit more red. Well, even so, most of the indexes ended in the positive. The reason is that the number one company by market capitalization, Nvidia, surged by nearly 4%. You could say that Nvidia's 4% and 31% surge trend led the market's upward momentum. Yesterday, there weren't an overwhelming number of rising stocks. However, the stocks that did go up showed a very bright green. And since these stocks have very large market capitalizations, you can say that the movement of the indexes was positive. Except for one of the various indexes, most of them are in the positive, especially the microcap is impressive. Yesterday, microcap stocks surged 1.58%. Over the past month, they've climbed up to 9.6%, maintaining a strong upward trend. Let me say it again. If interest rates keep falling and the economy stays strong, that's the perfect combination for microcap stocks. You can see it that way. Secondly, tech stocks performed well too, with the Nasdaq 100 rising another 0.59%. Thirdly, as Nvidia and Apple surged, the S&P 500 also rose sharply by 0.47%. Small cap rose by 0.26% and the Dow Jones increased by 0.16%. Yesterday, if we look by sector, only 4 sectors showed a positive trend, and among them, tech stocks led the market with a 1.47% increase. Let's take a look at the other market indicators. First, if you look at the market breadth of the S&P 500, it has narrowed a bit compared to yesterday. Nevertheless, among the 500 leading stocks in the S&P 500, do you know how many? 52.8%. With the stock prices forming above the 51-day moving average, the short-term trend is still alive. And right now, among the top 500 blue-chip companies, more than 60% still have good long-term momentum. If this number drops below 50, that's when the red light comes on. You can remember it like that. Next is the volatility index. The volatility index is still calm for now. Yesterday, the market, including the S&P 500, continued to hit all-time highs. In fact, there's no reason for the VIX index to go up. At 16.1, historically speaking, we're still seeing a very stable volatility index. The fear and greed index hasn't changed. It's remained the same. Once again, what we want is for it to move back and forth between 50 and 75. Currently, it's near the midpoint of that range. So values like 63, 64, or 65 are not bad at all. On the contrary, I personally think it actually works as a positive factor. It's the same with the market score. Currently, it's not dropping because of ongoing greed. If greed reaches 95 or 98, that could be an issue, but the current score of 80 is acceptable. On the contrary, since the United States stock market is steadily creeping up little by little, like a turtle, I think it's actually right for us to interpret this positively. This is the performance of the top pick. How about yesterday? Although all three major indexes closed in positive territory, in reality, the number of stocks that actually went up was limited. Only 8 stocks ended in the positive. The good news is that the most important stock in the United States portfolio, Nvidia, surged by 3.93%. Secondly, First Solar was up 3.16%, Visteon up 3.14%, Taiwan Semiconductor Manufacturing Company up 2.93%, Tesla up 1.91%, Advanced Micro Devices up 1.52%, Talem Energy up 1.45%, and Celestica rose 0.74%. Overall, stocks benefiting from artificial intelligence showed a strong trend. That's how you can look at it. With Tesla, it didn't really drop recently, just one day, and it's been rising since. The 1-month return is now showing incredible momentum, marking almost 30%. Now, all the other stocks have fallen, but there weren't many that dropped significantly. Bitcoin traded sideways and dipped slightly, with 112,000 being much lower than yesterday. Second, Alphabet is down 0.86, Broadcom down 1.61, Meta Platforms down 1.63, Palantir down 1.68, Strategy down 2.56, Coinbase down 3.07, Credo and Astera both down 3.2, and B2 down 5.23. Lastly, ProShares Ultra Ether Exchange Traded Fund is at 13.76%. Yesterday's atmosphere, especially for cryptocurrencies, was negative. This is quite interesting because interest rates are falling right now, and there's a high chance they'll keep falling in the future. But despite that, cryptocurrency-related stocks mainly dropped. Now, in my opinion, this part shows the tendency to buy on rumors and sell on news. In the end, my personal judgment is that if interest rates fall, this part has no choice but to go up. Now, let's move on to today's main article. You probably already have an idea who today's main article is about. Nvidia's stock price surged after a long wait. There was a reason for that. You're looking at the screen of the Medium membership that I run. I've posted a lot over the past 4 hours, and among them, there are 1, 2, 3, 4, 5 posts related to Nvidia. That's how much Nvidia is the company dominating the mood today. You could see it that way. Just what happened with Nvidia that so many news outlets are talking about it? Let me take some time to explain it to you now. I wrote celebration here. If you look at the title, you'll see that an amazing piece of news was announced. Nvidia has signed at least a 10 gigawatt partnership with OpenAI. It would be great if you could listen to Mizum's comment until the end to understand what this news really means. On Monday, Nvidia, a top artificial intelligence company, announced a new partnership with Open Artificial Intelligence. Nvidia announced that it plans to invest up to $100 billion, an enormous amount, in open artificial intelligence to support building artificial intelligence data center capabilities. So we need to find out why they are investing such a huge sum of $100 billion. Nvidia Chief Executive Officer Jensen Huang appears. Nvidia and OpenAI have been helping each other grow for the past 10 years. They were together from the first DGX supercomputer to the breakthrough of ChatGPT. This investment and infrastructure partnership marks a new era in artificial intelligence. They announced plans to deploy 10 gigawatts to achieve this. The two companies have signed a letter of intent for this partnership. They plan to deploy at least 10 gigawatts of NVIDIA artificial intelligence systems to train and operate open artificial intelligence as next-generation artificial intelligence models. Now, to sum things up, first, they invest $100 billion. Then, what open artificial intelligence does with that $100 billion is, as shown here, use it to train and operate next-generation artificial intelligence models. So then, what is needed to train and operate open artificial intelligence as next-generation artificial intelligence models? It's GPUs. They're investing $100 billion. In the end, most of this money will go back to Nvidia. That's how you should see it. Nvidia's next generation Vera Rubin first appears. Vera Rubin is, Blackwell, right? You can think of it as the next generation after Blackwell. The platform is expected to be operational in the second half of 2026. Nvidia's OpenAI investment will be injected each time a gigawatt is deployed. As I mentioned earlier, each gigawatt being deployed means this. It means they're buying GPUs. So you can see it as using the invested money to buy Nvidia's GPUs again. Open Artificial Intelligence announced that Nvidia will be their primary computing and network partner for their artificial intelligence factory expansion plans. Open Artificial Intelligence's Chief Executive Officer Sam Altman appears and says this. He says, computing infrastructure will be the foundation of the future economy, with artificial intelligence computing infrastructure becoming the base of the global economy. We will use the computing infrastructure built together with Nvidia to create new artificial intelligence innovations, and we will make it possible for people and companies around the world to use them on a large scale. In the end, creating artificial intelligence innovation means the training stage. And then, with this newly trained artificial intelligence innovation, we will move to the deployment stage where many people and companies can use it. That's what we're talking about. In a Consumer News and Business Channel interview, Altman emphasized that the only company on Earth capable of enabling such massive and rapid expansion of artificial intelligence infrastructure is Nvidia. Earlier this month, Broadcom's stock price surged after news broke that it had received a $10 billion artificial intelligence chip order from Open Artificial Intelligence. Due to this, Nvidia's stock didn't perform well, as some analysts. There was speculation that Broadcom could secure a larger market share by receiving more artificial intelligence chip orders from Open Artificial Intelligence in the future, and as you know, Open Artificial Intelligence is currently one of the strongest players in the artificial intelligence field. But there was a growing outlook that this important company would use more Broadcom chips than Nvidia chips. However, with the recently announced partnership with Nvidia, it's being evaluated that the possibility of that happening has significantly decreased. After the news of this partnership was announced, Nvidia's stock price surged by as much as 3.93%, while Broadcom's stock price dropped by 1.61%. All right, let's sum it up with a word from Mijun. In my opinion, a major positive event has finally happened for Nvidia, which we all love. I'd like to explain in detail why this is such a big deal and what makes it a major positive event. This news about Nvidia's investment in OpenAI means more than just a simple contract. It's highly likely to have a structural impact on Nvidia's future performance and stock price trends. By structural impact, I mean it has completely changed the game. In English, we call this a game changer. Now, let me explain in detail why I think this is a game changer. First of all, I think the impact on performance will be tremendous. Open Artificial Intelligence has chosen Nvidia as its primary partner. In English, they call it a preferred partner. What that means is if Nvidia has GPUs, they'll buy them all. That's how you can interpret it. Therefore, in the future, for next-generation model post-training and artificial intelligence factory expansion, you can see it as almost a 100% chance that Nvidia's GPUs, network equipment, and software will be used first. Now, because of this, Nvidia has secured tens of billions of dollars in stable and predictable revenue for the next few years. Now, this is crucial. Stock investment is about looking at an uncertain future. Nothing about the future is set in stone. No matter how well a company is doing, you can't predict what might happen in a few years. But what about these two companies' partnership this time? You can see it as Nvidia now being able to estimate how much profit it will make over the next 1, 2, or 3 years. It's coming into view. Now, this kind of predictable improvement in performance is directly linked to a rise in stock prices. For Nvidia, over 70% of revenue comes from data centers. On top of that, this partnership is at an unprecedented scale of 10 gigawatts. 10 gigawatts is hard for us to even imagine. This means hundreds of thousands of GPUs will be needed. That's how to see it. So, it's very likely that this will lead to an upward revision of sales guidance over the next 2 to 3 years. Now, there are forecasts available in the market right now, but these numbers are not included in those forecasts. Since hundreds of thousands more GPUs may be sold, both sales and earnings guidance will likely increase. Then naturally, the stock price has no choice but to rise as well. That's how you should see it. The stock price equals earnings times the multiple. If earnings rise like this and the multiple stays the same, the stock price will also rise. For reference, the investment firm is Barclays. They analyzed that this partnership will bring Nvidia about $350 billion in additional revenue by 2030. Now, just how big is $350 billion? Nvidia's fiscal year, 2025, begins January 29, 2024. Total revenue for the year through January 26 is just $130.5 billion. See, I put a question mark here. $130.5 billion is already huge, and $140.5 billion is also impressive. But what's the issue? Through this partnership, we expect $350 billion in additional revenue, over twice the $130.5 billion. This part, I can't help but call it a huge positive factor. All right. This is the point where we can clearly see that the scale of this partnership signals Nvidia's explosive growth in the future. If earnings keep rising, the stock price will have to go up. Let me summarize this for you. So what about this kind of concrete and large-scale partnership news? It can increase investors' confidence and help maintain or expand the stock price premium. As I said before, stock price equals performance times multiple. With this news, performance increases. But the important thing is that investors' minds are also put at ease. That's because such a big contract has been secured. Now people believe Nvidia will be solid for the next few years. What that means is there's a high chance the premium or the par won't drop. In fact, it might even go up. Recently, Broadcom landed a $10 billion order from OpenAI. You heard about that, right? And with this contract, it's become clear that Nvidia, not Broadcom, is the key artificial intelligence infrastructure partner for open artificial intelligence. So, I had one concern. As an Nvidia shareholder, I was a bit worried about this part. What if Broadcom takes away all the business? But it turned out that this worry was unfounded. Now, on top of that, OpenAI said that only Nvidia is possible. Therefore, Nvidia is not just a simple chip supplier, but an essential infrastructure for the artificial intelligence ecosystem. This has once again proven that point. To put it another way, the reduced concerns about competitors expanding their market share is, at the same time, great news that could strengthen Nvidia's monopoly. That's how I see it. Now, when investors' concerns decrease like this, the stock's valuation is bound to go up. That's just nature's law, see it that way. However, it didn't rise as much as we expected yesterday. In the short term, the stock price only rose by 3.93%, and in the futures market, it was actually going down. But in my view, in the mid to long term, once the Vera Rubin platform starts operating in 2026, that's when the real performance will start to be reflected. Now, stock prices usually move ahead of time. So even before the Vera Rubin platform comes out in 2026, the stock price could already go up. Stock prices often move 6 months in advance, so we don't need to wait. This also applies to investors like us. It's expected that this will delay the timing of taking profits from Nvidia stock as much as possible and strengthen the mindset for long-term holding. Now, what this means is that, including myself, there are people watching this broadcast who have held Nvidia stock for at least 3, 4, or even 5 years. From their perspective, they've seen over 10-fold returns and are now considering when to sell Nvidia. But the problem is, according to the news that just came out, it still feels a bit too soon to realize these profits. It was the kind of news that gave people the confidence to hold on for at least another 1, 2, or even 3 years. Personally, that's how I see it. In summary, this is the news. Nvidia has proven the visibility of its future performance, meaning they've shown that their results will continue to be strong going forward. And one more thing, they've also increased the possibility of maintaining their market share at the same time. No matter how well Broadcom does, they can't take much of Nvidia's market share. This has been confirmed. So, in my opinion, this was a game changer that could change the game. That's how I would like to evaluate it. In the short term, the stock price only rose slightly, but in the future, earnings, guidance, and the market consensus forecast are likely to go up. That's why, when analysts raise the market consensus like this will likely be reflected in Nvidia's stock price. If that happens, I personally think it will be a very strong force that can drive the stock price higher in the long term. Next, we'll examine Nvidia's stock, which currently has incredible momentum. A strong buy signal is coming out. Out of 26 indicators, not a single one is suggesting a sell. 9 are neutral and 17 are indicating a buy. And right now, the relative strength index is at 61 and 54, so it's not overbought either. So there's a really strong momentum at play, and we've been able to confirm through numerical analysis that there's still room for further growth. Then let's take a look at the stock price chart. To give you the conclusion first, from a technical perspective, NVIDIA stock price trend is very positive. First of all, on the last trading day, which was yesterday, the stock broke through its previous high and the trading volume was higher than usual. It increased noticeably. I'm not sure if you can see it down here. The green bar has gone up quite high. When the resistance line is broken like this and trading volume comes in like this, it means that the breakout is reliable and trustworthy. Many market participants support the upward movement. People aren't confused. Instead, everyone believes that NVIDIA will go up. This is very positive. The stock had traded sideways in a box range for a long time, but now that range is ending and a strong upward trend is likely to start. Now, the previous high was 183 and settling successfully above this, 183. What I mean by settling is this. For the next 2 or 3 trading days, it shouldn't fall below this level. If that happens, 183 will turn into a support level. Then, using 183 as a support, it will provide a foundation to keep moving upward. That's how you should see it. Now, if a technical correction comes, the important thing will be the 21-day moving average. Right now, it's at 175, so even if it drops to 175, there's a very high chance it will find support there again, as long as 175 doesn't break. It's wise, statistically speaking, to see that Nvidia's upward trend is still intact. That's how I'd like to explain it. The last content prepared for today is today's milk stock video. Today's milk stock video with dubbing includes the following. The famous New York University professor, Professor Damodaran, appears in it. Professor Damodaran is known as the valuation doctor. He originally used to invest in value stocks, but recently he has also been actively investing in stocks like Tesla and Nvidia. In today's video, right now Professor Damodaran's outlook on the United States stock market, and he often talks about the portfolio he's currently investing in. So, we'll also be talking in detail about which stocks he recently bought more of, and which ones he reduced his holdings in. That's all for today's Big Stock News on September 23rd. I sincerely thank everyone who stayed with us until the end of today's broadcast. If today's broadcast was even a little helpful for your investment activities, please don't forget to leave a like and a comment. Let's all keep fighting together until the day we can all retire through investing in United States stocks. Have a great day. Thanks.
As big tech boosts artificial intelligence spending and stock prices reach all-time highs, should we worry about valuations becoming concerning? Let's ask Professor Aswath Damodaran from New York University Stern School of Business. So do you actually find it concerning, especially as the market is hitting record highs in this cycle?
The problem isn't only tech stocks. Overall, you could say that stocks are trading at quite expensive prices right now. I won't use the word bubble or refer to it as a bubble. That's because it could imply that current stock prices have nothing to do with company performance. The performance is definitely still solid. This year, 75% of companies reporting earnings beat market expectations. So I think the market is being supported by earnings. As long as earnings continue to come out positive, there's no trigger for a correction. But I think it's not just big tech. All stocks are in that situation overall.
What about big tech? Nvidia is up nearly 4% again today on the news of its deal with Intel. It went up. IANA, EUA, Choigu role-playing game Blot.
Bedal Minjok. Nvidia has been fluctuating over the past few weeks. There was a time when Oracle briefly took the lead. In my opinion, for the next few months and years, companies in the products and services sector, rather than in the architecture field, will take the lead. If you look back at all the major booms over the past 40 years, architecture companies benefited in the early stages. Cisco during the dot-com boom is an example of that. Ultimately, product and service companies, not architecture firms, were the biggest winners. Companies like Oracle, Palantir, Microsoft, and Meta are trying to take that position, and it will be interesting to see which company becomes the ultimate winner. Maybe a company that hasn't been mentioned yet could take that position.
It's possible. Professor, which side interests you more? Do you mean the hyperscalers you mentioned, artificial intelligence software companies like Palantir, or semiconductor companies?
Are you talking about hyperscalers? If I may say, without products and services, hyperscalers or architecture companies cannot survive. In the end, it's because you need revenue, profit, and cash flow that come from the products you actually create. As you just saw in the Microsoft video, Microsoft is spending $100 billion on artificial intelligence architecture. To cover those costs, they need about $300 billion in revenue from artificial intelligence products and services. I'm pointing out this logic. If we expand this to the entire market, we're ultimately talking about a market that expects $3 to $4 trillion in revenue from artificial intelligence products and services. Right now, we can't see those numbers yet, but what I'm paying attention to is which company will take the lead and secure that level of revenue from products and services.
That's what interests me. I know you own many of these stocks personally, including several Magnificent Seven stocks. Of course, just Tesla alone.
Except for Tesla. And when it comes to Tesla, it's not because I dislike the company. I actually like Tesla as a company. If there's a chief executive officer who can redefine an electric car company as a robotics company, I think that's Elon Musk. However, the point is that Tesla has become a politically charged stock. I'm very weak when it comes to politics, so I don't want my investments to depend on how I interpret the political environment. That's why I sold Tesla, not because I dislike the company, but because I don't want my investments mixed with politics. But I still hold other stocks. For example, I only have half as much Nvidia as I did a year ago, but even though the stock price has gone up, I think that's fine. That's because I think Nvidia's price is already expensive, and I'd rather have my money go into Intel than Nvidia. In fact, my investment in Intel has performed better than my investment in Nvidia since last September.
That's the story. Intel seems to be on a good trajectory. I'm not sure if Tesla is still a political stock, but is there any stock or sector that you think is particularly undervalued right now?
Is there? I don't think any sector seems undervalued. Of course, you could point out sectors that are trading at lower earnings multiples, but compared to their own history, almost every sector is trading at a premium to its historical average. The energy sector might be an exception, but even that has a good reason for what we're seeing now. Even if you look at all the sectors, there isn't really a place where you can say it's cheaper than the price you could have bought that sector for 10 or 20 years ago.
There isn't any. What do you think will have a bigger impact on current valuations? If the Fed doesn't cut rates as much as the market expects, or if the economy turns out to be stronger than the market expects? What do you think could be the biggest variable?
What do you think? I don't believe the Fed has a major role here. We often think that the Fed controls interest rates, but in reality, interest rates move on their own. Recently, the Fed cut the benchmark rate by 25 basis points, but the Treasury market is still driven by supply and demand. In the end, what happens to interest rates is determined less by whether the Fed cuts rates 3, 4, or 6 times, and more by what changes occur in inflation and the real economy. We should also closely monitor that aspect going forward.
We'll be monitoring this closely. Today, global government bond yields are higher. Thank you for joining us.
Thank you. Whatever you do, the start of a dream is important. Be ambitious and grow little by little every day. Enjoy today's journey. Even if a dark challenge comes, I'm not afraid.